Hello and welcome to the Scan the Markets webinar with myself, David Madden. I work as a market analyst for Equity Capital in London, and Equity Capital is a part of the overall equity group, which of course includes Equity Nigeria in Nigeria and also FX Pesa in Kenya. So for today's webinar, what I'll do is I'll have a quick run through of about five of the major and most popular markets. I'll run through what fundamental news has been driving the markets, and I'll also talk about the markets from a technical analysis point of view. For those of you who are familiar with that, technical analysis, TA, is essentially the study of charts. And of course, what I'll be covering is today's webinar is just purely my own thoughts and opinions and comments. This should not be construed as trading ideas or investment advice. So first and foremost, starting off with the price of gold, we can see the gold here. The longer term trend for gold has been to the downside. A few days ago, gold fell to its lowest level since late January, and that was largely down to the fact that we had a strong US dollar. Things have changed in the past 24 to 48 hours. We've had a decline we've had a turnaround in the US dollar. The US dollar has since moved lower, and in turn, that's pushed up the price of gold. Why is this? Well, gold is traded in US dollars. So one of the common items that moves gold is what's going on with the US dollar. Gold is traded in US dollars. So if you're coming from the UK or the Eurozone or Japan, and you want to get your hands on gold, you first must need US dollars. So if the US dollar is weak, your Japanese yen or your British pounds gets you more dollars, and therefore you can buy more gold. Or conversely, if the US dollar is very strong, your Japanese yen or British pounds get you fewer American dollars to purchase gold. Therefore, the demand for gold tends to dwindle. So if you're trading gold, you always need to keep an eye on what's going on with the US dollar. And one of the kind of themes that of the past couple of days has been that the US dollar has been quite weak. So we commented on here, a weak dollar. That's been pushing up gold. What's also been going on is what's called a risk-off attitude. Broadly speaking, when traders are optimistic for the health of the global economy or a particular economy, they tend to buy stock, they buy shares, they buy indices, they typically buy gold. Sorry, they typically buy industrial metals such as copper or nickel, and they'll also buy oils, be it Brent crude or WTI, because essentially they believe that these are going to get better. The global economy is going to continue on improving. With that, you'd imagine that more oil would be required, more metals would be required, companies will make more money, so stock markets will go up. So when we had a period there of basically when you have bouts of stock markets rising, you tend to see the likes of gold fall, and then vice versa. Whenever you have a period of stock markets falling through the floor, as we've seen in the past couple of days, you tend to see gold rally because people think, right, I'm going to take my money out of riskier assets, be it stocks, and pour them into assets that are deemed to be low risk, such as gold. So another reason why gold has performed well in the past couple of days is the kind of wider risk-off attitude. The opposite of risk-off is risk-on, whereby you want to take on more risk. And if you want risk-off, you want to kind of offload your risk, as it were. So a combination of these reasons has pushed up gold the last couple of days. As I mentioned at the very start of this chart, gold fell to a multi-month low only a few days ago. So already gold in the minds of some traders and investors, it was looking quite cheap. Anyways, markets don't move in straight lines, as one of the old adages. So with that, the fact that gold was already quite cheap because it had fallen so much, then all of a sudden you have a change in the US dollar, you have aggressive declines in stock markets. So what happens? We see a sharp move to the upside in gold. So we can see here the price action has been moving higher recently. In the very short term, what we've seen is a definition of an upward trend. We've had the higher high, the higher low, and the higher high. In contrast to that, all the way down, we've had a downward trend, and the definition of a downward trend is the opposite of an upward trend, a series of lower lows and lower highs. So we can see the market has retreated from this peak here, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. We're in a strong downward trend for quite some time, and now we're rebounding. The question now we're all asking ourselves is gold just going to have a reasonably large rebound before it falls back into the much broader bearish trend? Or is gold going to actually turn around and actually go all the way back up towards the kind of 1900 level, or perhaps up towards 2000? That remains to be seen, but at least kind of in terms of in terms of stages, for the time being at least, while gold continues to hold above these two simple moving averages. This here is the 20-period moving average, this here is the 50-period moving average, and this here is the 100-period moving average. By the way, all the charts I look at are 4-hour charts. While gold continues to hold above these two simple moving averages, it's likely the near-term, short-term upward trend will continue. Looking at the MACD indicator here, we can see there's been a steady decline in positive momentum. The MACD indicator essentially measures momentum, and when momentum is in positive territory, which it is here, it suggests the bulls are in control. They're the ones in charge. They're the ones driving the market higher. Looking at the RSI, the Relative Strength Index, essentially measures kind of how it's also a form of measure of change. We can see that the RSI is moving higher as well, suggesting the price bias is to the upside. So in the near term, while gold continues to hold above these two simple moving averages and continues to hold above this region here in around 1805, the last big low before the move higher, it's likely that the short-term upward trend will continue. But what's going to happen in the medium longer term trend? We have seen periods before where gold has enjoyed a rally only to turn lower again and actually create new lower lows. We have seen rallies such as here, to a lesser extent here, a very good example here, and also here. So we have seen several examples in the last 4 or 5 weeks where gold has rallied to a certain point. It hasn't turned around fully. It's only had a bit of a rebound, only to turn lower again. Now, if we were to see that, where can we potentially see that again coming from again? Looking at this moving average here, which is the 100-period moving average, and once again, I'm looking at the 4-hour chart. If you follow this chart, this moving average around, you can see how at the beginning of the month, the 100-period moving average acted perfectly as a resistance point for gold. If you continue that, if you follow that chart around, this moving average around, you can see it sort of acted as a resistance point in late April. It sort of acted as a bit of a support area in mid-April, and you can see here on a few occasions it acted as both resistance and support in early April. So there have been several occasions where the 100-period moving average has been of importance, be it a support or else a resistance area. Now, what I always say is if a certain metric, in this case a moving average, if a moving average has been of importance in the past, it makes it more likely to be of importance in the future, although there are no guarantees. So it will be interesting to see what happens with gold. Will gold continue to move towards this moving average? What will happen next? Will it fail to overcome the moving average and begin to move lower again, like as it did here? Or will it actually smash above that moving average and then look to kind of move higher beyond that? If you do see a decent break beyond this moving average, the moving average comes into play in around 1815. If you break beyond that, we could be looking toward this peak here in around 1892. And if you go beyond that, the next big level to watch out for will be the high here in early May in around 1908. Coming up now to the US dollar. So we can see here that whenever I'm looking at a chart, the first thing I do is look at the big picture, price action over the last few weeks and months. I ask myself, what is the price action going on? What is the market doing? Markets can only do one of three things. They can go up, they can go down, or they can stay the same, trade in a range. And we can see here, obviously, we have a lot of volatility in euro dollar. What we can see overwhelmingly, there's been a very aggressive downward trend. In fact, the lows that we set here only last week was a 5-year low. So it really highlights how bearish that move is. If only this time last week, or just over a week ago, euro dollar itself was at a 5-year low. Why is this? Now, well, since then, we can see here in the last few days, we've had a rebound. In fact, now we're actually just about hitting a multi-week high. So why is this? I mentioned a moment ago on the gold chart, a weak US dollar. The US dollar has turned around in the past 24 hours, kind of the past few sessions. So the dollar's gotten weaker, and therefore euro dollar's gotten higher. What's also been going on? we have heard some rumblings from certain members of the European Central Bank, which is the central bank for the Eurozone. They've alluded to the possibility we might have an interest rate hike from the European Central Bank in July. So when you have a combination of a very weak euro, because euro dollar was at a 5-year low only a week ago, 10 days ago, and then you have a central banker coming out and saying we could look to have a rate hike in July. We've had a few of those. We've had 2 or 3 of those in the last 4 or 5 weeks. That's why we're seeing a bit of a turnaround in the euro. Do people actually really believe there will be a rate hike in July? Maybe not. But the reality is, while those headlines are doing the rounds and you have a fairly weak euro, you don't be surprised if you see a bit of a bounce back. Similar to what I was talking about with gold a minute ago. We've had an aggressive downward move, a series of lower lows and lower highs. We're now rebounding. And the question we're asking ourselves is, are we going to actually have a full-on correction and head back up towards 107, 108, up towards back 110? Or is this rebound that we saw here similar to the rebound that we saw here? Because let's face it, a multi-year low was set here in late April. And then what did we saw? We saw a fairly large rebound into early May. As you can see, the market moved lower, didn't trade in a small range for a while, only to fall further again and print a new 5-year low. So we need to look at the recent price action, try and figure out what's going to be the next move. Well, the first thing I observed from this move here, it's quite a sustained upward move. First and foremost, looking here, we can actually see that it's actually managed to hit its highest level, I think, in a few weeks. So we're back up to levels last seen in essentially the first week of May. So we're back up to levels last seen about 2 weeks ago, maybe not quite 2 weeks ago. That in itself, a 12-day high, a 14-day high, that in itself is reasonably important. We can also see here that we've managed to actually clear all 3 moving averages. And it's been some time since we were actually back above all 3 moving averages. The last time we were back above all 3 moving averages, the 20 period, the 50 period, and the 100 period was about 1 month ago. Was the 22nd of April, thereabouts. So we're talking about, we haven't been above all those metrics in 1 month. Granted, it's worth remembering though, back in April, when we did get to that level, does history repeat itself? Sometimes it does, sometimes it doesn't. But back in April, what we saw here was, we saw the market hit a multi-week high, goes up to a level last seen. Once again, only a 3-week or a 4-week high was printed. We also saw it clear all 3 of these moving averages. Did it do a full-on turnaround? No, it didn't. It quickly moved lower, and then it quickly went on to create new multi-year lows. So we're now asking ourselves, are we going to see something similar, whereby we've had a large rebound and the market's going to give up its gains and head back down towards 104, 103, or is it going to be a case of we're going to have a sustained turnaround? Well, at least in the short term, all we can look at is say, what's been going on? We're above all, we've hit a kind of a 10-day, 14-day high. That suggests that sentiment's bullish. We're back up above all 3 simple moving averages. That suggests sentiment's bullish. The RSI is moving higher, indicating the price bias is to the upside. The MACD indicator is now showing positive momentum, so it's indicating the bulls are in control. While we continue to hold above all 3 moving averages, it's more likely the short-term upward trend will continue. If we do continue to rise from here, where can we target? We could target the peak here of early May, and at 1.0641, and a break above that could target this peak here at 1.0738. Now, as I said, whenever you're looking at a certain, when you're looking at a market, you look at, of course, the short-term type, the short-term move, what's the short-term trend, but also be acutely aware of what's going on with the more medium and longer-term trend. And as I said, as we established here, we saw a very good example here for a market hit a multi-week high. It broke above all 3 moving averages, but it didn't have a full-on turnaround. It kind of quickly moved lower and then tumbled again, and went on to print new lower lows. So could we see something similar? Should that be the case, if we do look to kind of move aggressively lower from here, which we could easily do, areas I've been looking out for, we're kind of first and foremost, I'll probably be looking out for the recent low, this area here, in around 104.59, 104.60, thereabouts, which was essentially the last big low before we moved higher. So 104, 104.60 thereabouts. We look at this area here, we can see a few occasions it acted as support. This was sort of like almost like the kind of the support zone before we had the next leg higher. I'll be looking up for 104.60. I'll be looking down toward this low here in around 103.89. And the next big level to watch below that will of course be the 5-year low that was set last week in at one spot 03.48. And of course, if we go below that, then we'd be printing a new 5-year low, and that would suggest that further losses are on the way. And then going below that, we were looking towards 103, 102, and then at that point, the calls for parity will probably have grown quite loud. Looking here at the US 500, the S&P 500, once again, ask yourself what's going on in the markets. We can see here that we've been in a very clear and obvious downward trend. In fact, the lows that we've set in the last few hours are pretty much either a retest or they're quite close to the low that was set this time last week, 85, or a few days ago, 858. We're pretty much kind of on par with lows that were set 1 week ago. And by the way, those lows were levels last seen in the first few months of 2021. So we're talking back to kind of 14 to 15 month lows. So when you hit a 15-month low here, you have a fairly large rally, only to give pretty much all of it back up again. We do see it before we get a bit of a base in around this area here at 38.58. But that being said, when you're holding below all three simple moving averages, when momentum is firmly in negative territory, you have to, from that point of view, and while you continue to hold below these moving averages, it's likely that the short term, which coincides with the longer term bearish trend, is still in effect, because you always have three sections of a trend. You have the very short term, and you have the more medium term, and you get the more longer term trend. So it can often be the case that the long term trend and the short term trend are the same, and the medium term trend is the counter trend. So what I'm saying is this is a very kind of rough guide here, but it'll be something along the lines of saying the longer term trend is this move here. The kind of medium term trend is a correction here, and the short term trend is another low. So the shorter term trend lower, the much longer term trend lower, and the medium term trend, the counter trend, higher. So this is what I mean about there are always trends within trends. So you also need to kind of look at the price action that has happened and then try and visualize what's going to happen in the next few moves. And that's basically the approach I look at when it comes to trading. So in terms of I'll just quickly cover these lines. I shall leave them. When it comes to the kind of price action of the US 500, we've only a few hours ago we retested basically a joint 15 month low. To me, that tells you kind of everything you need to know about how bearish the market is. Momentum's firmly in negative territory. While we continue to hold below these three moving averages, I think that the short-term bearish trend will continue. Moving lower from here, we were looking to retest 38.58. A break below that would be fairly significant. Why? Because we've bounced off it twice, and the more a metric bounces off a certain area, the more kind of important it becomes. So 2 occasions is reasonably important. So if we break below 38.58, we could then look to head down towards 38.50. On the other hand, if we can manage to stage a rally from here, where can we look to? Well, I'll be looking towards this high, this peak here at 40.26, and then beyond that, the next big level to watch out for will be basically this peak here, just shy of 4100. And of course, if we clear that peak, that'll be very significant. That'll be of major significance, because we'll then be creating a multi-week high, and would also be kind of essentially signaling to the market that this could be the turnaround of the actual US 500. But once again, monitor previous price action to try and predict what's going to happen in the future. We saw here that on this occasion here at the very beginning of May, we had a fairly large rebound here, but did the market turn around? No, it didn't. It encountered resistance perfectly from the 100-period moving average and went on to create a new, multi-month lows. And what's going on with the US 500? Well, similar situation, as I mentioned already in this update, very much a risk off sentiment. traders are fearful that we're going to have further interest rate hikes, large interest rate hikes from the Federal Reserve. So with that, people are saying to themselves, traditionally speaking, when interest rates rise, or when the perception is interest rates rise, that typically puts downward pressure on stock markets. Why? Well, because if interest rates rise, companies that are listed on the stock market, chances are they have debt to repay, their interest payments will go up. Also, consumers, if most consumers tend to have some form of debt, be it credit card or a personal loan or a mortgage, if their cost of borrowing goes up, that takes more and more money out of their disposable income. Therefore, demand dries up, or at least gets dented. So with that, so broadly speaking, with this chatter of higher interest rates in the pipeline, that usually puts pressure on stock markets, which is precisely why we have the risk-off attitude, and therefore we were down at a 14-15-month low recently on the S&P 500. Looking here at the domestic market here in Britain and the UK 100, we can see here it's had quite the volatile ride. It enjoyed a very large rally between basically being at the beginning of May until mid-May, but the overall kind of broad sell-off that's been kind of doing the rounds in the past few days has really kind of weighed on the UK 100. Similar situation, it's moved aggressively below all three moving averages. Momentum is firmly in negative territory. The RSI is at the lower end of the range, although we do appear to be turning around, kind of turning around the RSI, just like how we're seem to be turning around on the price. It wouldn't be enough for me to kind of switch to a bullish view, but while we continue to hold below these three moving averages, it's like the short-term bearish trend will continue. Moving lower from here, I'll be looking back down towards 71.88, and a break below that, I'll be looking down towards 71.55, and going below that, I'll be looking to 71.00. Now, that being said, even though, in the short term, I would have a bearish view on the UK 100. It is worth noting that we're comfortably off the recent lows. But this tells me, okay, things are turning around. It could be turning around. It could be bargain hunting before, people like to kind of snap up after a big sell-off. But then whenever those bargain hunters stop bargain hunting, the market tends to kind of roll over itself. But looking for a base is what you're. Whenever there's a significant sell-off, you've got to be watching out for the early signs of, are we seeing a bit of a base being formed? And the first kind of stage of a base being formed is typically the lows get higher. So if this area here is going to be the low in the near term, it's worth pointing out that the lows that were set here were comfortably above the lows that were set here, which were comfortably above the lows that were set here. So if you look at this price action here in the middle of the month, we fell down to a multi-month low was set here around the 8th and 9th of May. We had an aggressive move higher. It moved sharply lower again, but notice how the lows that we set here a few days after that particular low, it didn't actually retest that area. It managed to kind of form a bit of a base, and from that point, it was a jumping off point to this rally that we had here. Obviously, this rally didn't last very long because the aggressive sell-off that we saw in the US last night, the S&P dropped over 4%. The Dow Jones had its worst single-day loss since in 2 years. That is weighed on the UK market today. But the lows you set in the last few hours didn't manage to take up the lows of mid-ish May, and they certainly didn't look at retesting the lows of early May. So to a certain extent, there's kind of in my mindset, it's kind of broadly kind of observing the sort of a bit of a base being formed there. That isn't obviously a pretty good trend line, but I just want to highlight it. So if you can manage to rally from here, to be honest, I wouldn't really look to kind of switch to an optimistic or a bullish outlook on the UK 100 until at the very least we kind of get close to or even retest this peak here at 75.44. If we break above that, that'll be of importance, because we then creating new highs or clearing previous peaks. That's the kind of momentum to say the market's moving higher. Typically, if you clear that peak, I'm looking up toward this high here, the high of early May at 76.21. Coming now, last chart I've been looking at in terms of the ones I prepared. I've got a comment here about look at sterling yen, which I will. But some of the stuff I say about sterling yen will be covered in dollar yen. So what's been going on in relation to the USD JPY? So the kind of big picture view, I know for myself because I follow this currency pair quite well, is the very, very, very long-term trend for dollar yen is to the upside, is higher. In fact, the highs that we saw recently at the beginning of the month were a 20-year high. So the 20-year high in dollar yen at the start of the month really tells you just how bullish dollar yen has been recently. Granted, we have seen, the beginning of a downward trend, the lower low, the lower high, the lower low, the lower high, the lower low. It's interesting that the lows we've seen in the last few hours have managed to take out the lows here of last week. That in itself is interesting. So, and this is partially fueled by the decline in the US dollar, which I covered in the gold chart I talked about on euro dollar. But we see a broad decline in the US dollar in the last 24 to 48 hours. That's one component. Another component is the risk-off attitude. And I mentioned this on a previous chart. When traders are fearful about the health of the global economy, they tend to take their funds out of assets that are deemed to be higher risk, such as stocks and to a lesser extent oil and industrial metals, and they tend to plow it into assets that are considered to be low risk. And the Japanese yen is one of those assets. So people are looking at, it's no coincidence. I flick back to the S&P 500. It's no coincidence the S&P 500 was today hit a joint 15-month low, and we're seeing a sharp downward move in dollar yen because people are buying the Japanese yen. Whenever you trade a currency pair, the currency that's mentioned in front, in this case the USD, this is the one you're buying or selling. So if you're selling dollar yen, you're selling the US dollar, and in turn you're buying the Japanese yen. So so the rebound in the yen in the past few days or past week or so is because of the increased uncertainty in stock markets. So anyone who trades, got an individual here asking about sterling yen. Anyone who trades yen crosses JPY currency pair, currency crosses. If you trade the yen, you have to be keeping an eye what's going on in stock markets. Even if you don't trade stock markets, you have to be keeping an eye what's going on with stock markets, because if stock markets are falling to new 1 year lows or 14-month lows and the likes, that's probably going to influence the Japanese yen. Conversely, when stock markets are very, very strong, or stock markets are in the process of rebounding as they were only about 2 or 3 weeks ago, the Japanese yen tends to be weak. So keep an eye out for what's going on for stocks on stocks if you're looking at the Japanese yen. So we can see here that we've actually fallen back to a level last seen basically in late April. So we're essentially at a 1 month low on dollar yen. So that's quite important. We can see a clear example here of a downward trend being formed. It's not a great chart, but just you get the picture. You get a downward channel in play here. We've recently hit essentially a 1 month low. We've had a few lower lows and lower highs. We're comfortably below all three simple moving averages. So while we continue to hold below these three moving averages, I think the kind of more medium-term bearish trend is going to continue. Moving lower from here, I've been looking to retest the lows of late April at 126.93, and a break below that could see us down towards 126.31. I should have also said as well, looking at the MACD indicator, we can see that momentum is firmly in negative territory, so suggesting the bears are in control. Look at the price action of the RSI. You can see that it's also in its own downtrend itself. In itself, you can see the RSI, the relative strength index, that's moving lower as well. That's in a downward trend, suggesting that the price bias is to the downside. So keep an eye for these two kind of moving averages. I think maybe these two metrics. If you're looking at dollar yen, if we were to see a rally in dollar yen, where could we go to? Well, it's not perfect, but as a broad idea, what you could do is you could even make an argument to say if dollar yen does have a rally, it first needs to break above this trend line here, because if you connect point A, B, and C, if you have a trend line that has 3 points, then it's 3 points or more, it's a confirmed trend line. If it only has 2 points, it's a tentative trend line. And ideally, the more points trend line has, the more of importance it's likely to be. There are no guarantees, but the more important it's potentially going to be. If we do get a rally in dollar yen, where could we go? Where could we go to? I'll be looking first and foremost up toward this trend line here in around kind of 129.20-ish, thereabouts. I'll then be looking for this peak here, the last peak of kind of mid-May, in around 129.77. If we clear that one, we might be looking towards 130, kind of a big number for dollar yen. And if we clear 130, we're not too far away from the 20-year high that was set only a few weeks ago. Now, even though this is fairly bearish looking here, you can't ignore the fact, and I'll switch to a daily chart. You can't ignore the fact that dollar yen has been in a roaring upward trend for the last few weeks and months. So in the grand, when you look at it on a 4-hour chart, this looks fairly bearish. When you look at it on a 1-hour chart, this looks quite bearish. This price action here looks quite bearish. But this is what I mean about the importance of changing charts. If you typically trade off of, say, a 1-hour chart, always look to, say, the next charts, couple of chart sizes out, be it a 4-hour chart or a 1-day chart. If you always trade off of a 10-minute chart, keep an eye on what's going on the half-an-hour chart, on the 1-hour chart, and maybe even the 4-hour chart, because you need to be aware of what the bigger picture is. Because, for example, you might be looking at this price action here and saying, I think this is very, very bearish, which, there's an argument to be made that it is. But if you ignore the fact that there's a massive upward trend going along here, you're possibly going to get caught out, because what's typically the case in financial markets, the longer the overarching, the longer term trend tends to win out. Of course, there are times when the overall trend comes to an end and then it goes completely the opposite direction. But more often than not, the overall trend tends to win out. So if you're shorting dollar yen in the near term, fair enough, but you have to be mindful of the fact that at some point, it might just be the case that this downward move here in dollar yen isn't a full-on turnaround of the currency. It's just a large pullback before the currency pair continues on its large upward trend. I've already covered gold, so I'll come on now to sterling yen, and if I have time, I'll then take a quick look at gold. Sterling yen. Actually, I've got perfect. I've got sterling yen already lined up here. So the price action of sterling yen, we can see here that what's been going on with sterling yen the last few days or few weeks has been quite similar to the price action we saw of the price action with dollar yen, whereby it was in a very strong upward trend. Sterling yen hit a 7 or 8 year high in mid-April. Around the same time, dollar yen hit a 20-year high or thereabouts. So the kind of broad picture has been the Japanese yen was weak for a prolonged period of time. It's gotten stronger in the last few weeks. And we can see here that it's been, it's had a fairly large rebound. It got back above all 3 moving averages. It went on to hit its highest level in a few days or almost a week, only to move lower yet again. Why yet again? Well, as I mentioned a minute ago, we saw a large upward move in the Japanese yen because of the fact that there's been aggressive moves lower in global stock markets. So it's no coincidence that the yen is getting stronger, or in this case, sterling yen is moving lower as stock markets are moving lower. So we have had a bit of a rebound in the past few hours. It's not, in my opinion, this isn't as clear cut because we've already managed to rebound, and when we rebounded, we've already managed to get back above the 20-period moving average. This chart, this candle here, is quite bullish. The body of this yellow candle here is quite this yellow rectangle that we're seeing here. The body of this candle is quite bullish. It seems to me sterling yen is sort of in some sort of a is trying to figure out which way to move next. We can see here on the currency pair that it's kind of almost like in a kind of a rectangular kind of bit of a range that it's kind of stuck in here. It's almost like it's trying to figure out where do we go next. Do we break lower or do we break higher? That's the impression I get from the yen moves that we're looking at now. But once again, I'd always kind of defer to the kind of overall trend, and the kind of the more short-term trend is lower, and the much longer term trend of the last few days, anyways, is lower as well. So I think in the near term, when we continue to hold below these 2 simple moving averages, the 50-period moving average and the 100-period moving average, these 2 ones here, I think it's more likely we're going to see further losses in sterling yen than we are rallies. And if we do move lower from here, first I'd wait for it to possibly to break the recent lows here, and then I'd be looking back down toward this area here, down in around 155.58. 58, and then below that down towards 155 itself. Now, as I mentioned, we can't ignore the fact that we have seen a reasonably decent medium-term upward move here. We're comfortably off, even with this pullback the last few hours. We're still comfortably above the lows that were set only last week. So it's possible that we're going to have a downward move here and then another leg higher again. So it's possible that we could see a price action like this. This is what I mean about visualizing the trade. It is possible that we've had the move higher here, not quite a false start, but it was a pretty aggressive move higher. We kind of gave back about a third or maybe a half of the ground that was gained here, only to kind of form a bit of a base and then move higher yet again. This is a possibility. And this is what I mean about I always kind of try to visualize the price action, try to figure out what's going to happen next. We can already see that the market has been moving higher. This has been a very bullish candle that we're seeing here. Although momentum is in negative territory, there's been a steady decline in negative momentum. These red bars here are getting smaller and smaller. So although the bears are in control, they're not as influential as they once were. So if we do see a continuation of this kind of short-term upward move, first and foremost, I'll be looking toward this area here around, well, just shy 162, in around kind of 161.95. If we clear that, that'll be important, because we'll then be back up the levels last seen at the beginning of the month. I would then be back up the levels last seen, which would make it about a 2-week high, about a 2-week high. That'll be fairly reasonably important. And then we can see here there was several occasions that there's a few metrics along here that act as resistance in around kind of 163.56, 164.23. So there's been a few kind of price points here that have acted as resistance for sterling yen. So, but at the same time, had you asked me this question, in late April, I would be having the same conversation. We had a sharp, we've had a sharp move higher here. We briefly reclaimed all three moving averages. We traded within a small range. We stopped making new highs. We didn't really create many new lows, but we stopped creating new highs. Then we began to drift a bit lower. We moved towards the recent low, and then notice how once we actually properly broke below the recent low, put the line here. Once we actually properly broke below the recent low, notice how quickly the market just fell apart. So my guess is we could potentially see something similar with this area here. This area here. It's at a few occasions acted as a support area. For now, what happens? Is it a support area and it's used as a jumping off point to move higher? Or is it a case of whenever anybody typically buys it in this zone, if they don't show up to the party, as it were, if they don't buy into the market to keep a floor under it, will we just break lower? And if we do, that's what I'm thinking about when it comes to sterling yen. But once again, I must reiterate, if you're trading if you're trading sterling yen or any currency pair with the Japanese yen in it, definitely keep an eye on what's going on with global stock markets. I'll take a quick look at gold, and then I'll look to wrap things up, because I'm conscious now that I've been speaking now for about 40 minutes. The longer term trend for gold is clearly to the downside. In fact, the lows we set 1 week ago were about, I think they were 3-month lows or over 3-month lows. So the kind of big picture view for gold is negative, but the short term is positive. We can see here that we've had a pretty decent move to the upside. We've seen a higher high, a higher low, and a higher high. Of these three moving averages here, once again, I'm on a 4-hour chart. Of these three moving averages here, the 20 period, the 50 and 100, we've managed to move back above 2 of the 3 moving averages. So while we continue to hold above these 2 moving averages, I think the short-term upward trend is going to continue. If it continues to move higher from here, I'll be looking towards this moving average here, the 100 period moving average, which comes into play in around kind of 1856, 1855. Notice how the 100 period moving average here in early May acted perfectly as resistance, and the market just moved lower yet again. Is that going to happen? Is the market going to rally up towards 1855, 1856, only to kind of run into a barrier and then move lower and then retest the recent lows, or possibly even go lower again? Or are we going to actually smash above it and then use that kind of 1855, 1856 area as a floor, as a jumping off point for the next big move higher up towards 1900? So if you do manage to kind of break above this area here, I'll then be looking up towards this peak here in 1892, and then beyond that 1900, and then beyond that up towards 1920. On the downside, of course, if we break below this, I'll be looking down towards 1905, 1805, the lows that were set here, the most recent lows, and if we go below that, I'll then be looking down towards kind of 1780, thereabouts, the lows that were set this time last week. So I look to wrap things up there. I appreciate those who asked a couple of questions. It's always more entertaining and interesting for me when there's a bit of interaction going on. And especially with something like sterling yen, I look at sterling yen a bit, but not as often as much as I would look at it with dollar yen. What I'll do now is before I let you go, I'll look to just point out I'm quite active on Twitter. For those of you who have an account on Twitter, in relation to Paul, you're very welcome, more than happy to help. In relation for those of you who are on Twitter, feel free to get in touch. My Twitter handle is @dmadden, that's DMADDEN _equity, EQUITI, equity with an I on the end. @dmadden _equity is my Twitter handle. Feel free to follow me on Twitter. Feel free to get in touch and say, hey David, what do you make of this, or what do you make of that? I can't give advice. Everything I have to say and do, it must be within the remit of our compliance department. But like with the webinar I just gave, I can keep it. I can provide my own kind of thoughts and comments and analysis. It wouldn't actually be anything else. I would just talk about the trend that's going on, and if the trend that we're seeing continues, we could target this price, and if the trend turns around, we could look at these prices here. So I'll look to wrap things up there. I'll be back this time next week for my Scan the Markets webinar, so feel free to sign in then. And if I don't speak to you between now and then, everyone have a good week.